Hey, what's going on, guys? Today I'm going to be talking about index funds from Vanguard that I'm going to be purchasing in 2026. So Vanguard is a very popular fund manager out there that is known for their low fees, and definitely index funds in general. They've kind of innovated in this space many years ago, and they're definitely one of the largest fund managers from a assets under management perspective. So diving into the funds, these are the funds that I'm going to be focusing on acquiring in 2026. So the first one on the list is VTI. This is the total U.S. stock market index fund ETF, including large cap, mid cap, and small cap stocks. VOO is pretty much very similar to VTI. There's a lot of overlap, but it's just large cap specific. Blended large cap value, large cap blend, and then large cap growth stocks. So the top 500 U.S. companies based upon market cap. VUG is Vanguard Growth. It's specifically, I believe it's large cap, mid cap, maybe even small cap. I'll have to double check on that, but I think it may even just mainly be large cap growth. So it is a specific type of stock that we're targeting, large cap growth. And then lastly, VXUS. This is pretty much the equivalent of VTI, but international. So it's the total international stock market index. So large cap, mid cap, and small cap international stocks. So just going to go ahead and address, something that I think we'll hear a lot of. There's a lot of overlap. Wow, that pin is really big. There's a lot of overlap between these three, right? And, often a lot of people would just say, oh, just buy these two, VTI, VXUS. And I totally understand that. But for my current situation, I want to be overweighted to large cap. And something that, I can obviously address later down the road is I can consolidate these two and just kind of roll them into VTI. But for now, I want all of these, right? Like I want VTI, I want VOO, I want VUG, and VXUS. Later down the road, I may consolidate to just kind of simplify things, but that's something I will definitely address later. I'm not really worried about that right now. So bunch of overlap in this portfolio, but for me right now, I'm totally fine with that. So scrolling down, these are the allocations I'm going to be going with. So we got 45% VTI, 25% VOO, 15% VXUS, and 15% VUG. So once again, we're definitely heavily weighted to the US, coming in at 85% between these three. 1, 2, 3. And then, I'm sorry, 1, 2, and then 3. That's 85%. And then we have 15% international. So then lastly, just a simple illustration of $1,000, what that's going to look like. 45% is going into VTI, 25, 15, and 15. So pretty simple allocation, across the accounts. ETFs, I'm going to be trying to purchase these in taxable accounts, or at least the focus on that. And then like tax deferred accounts, I may try to pick Fidelity. Like I currently use Fidelity for most of my retirement accounts and tax sheltered accounts. So I may use the mutual fund equivalent. So that's going to be, FSKAX. It's going to be FXAIX. International, I think, is FTIHX. And then VUG is FSPGX. So if I choose like the mutual fund alternative, this is more than likely going to be what I'm going to be targeting. Now, obviously, with some of these, like Fidelity even has like zero cost index funds that I may even allocate to as well. So like these have small expense ratios, nothing really crazy. But if I want to take another step further, I can either go with the zero cost funds, which is not a big deal in like tax sheltered accounts because you don't have to worry about really capital gains, distributions, or anything like that. But for now, I think these are going to be the four that I focus if I choose mutual funds. Now, mutual funds, there's no bid-ask spread, so you're going to be saving a little bit there. And you can, they're only traded once per day. So at the end of the day, after hours, mutual funds are traded. So it's not as attractive as seeing your money change in value throughout the day. But yeah, they have their pros and cons, right? If you want to be less trading, be less emotional. You don't want to see your value go up and down throughout the day. Mutual funds might be something you can definitely take a look at. If you have a dollar amount, it's not as big as what it used to be, but back in the day, if you only had $100 you wanted to invest and VTI was trading at 343, you couldn't purchase a share because fractional shares were not a thing. However, nowadays, that's kind of an old methodology. You can buy $100 of VTI. It'll be a fractional trade. So back in the day, this was more lucrative, right? Like using mutual funds over ETFs were more lucrative because you could buy $100 of a mutual fund. And it was a very easy process. But nowadays, it's kind of not as a big of a deal, right? Because fractional shares are definitely a lot more popular. But anyways, this is going to be the end of today's video. Just a breakdown on some Vanguard funds / Fidelity mutual funds that I'm going to be allocating to in 2026. Let me know your thoughts down below. Do you like these funds? Is there too much overlap for you? Let me know your guys' thoughts down below. Some other things I've mentioned before as well. If you want to sell covered calls, that's great. SPY might be better for this guy, and QQQ might be better for this guy. Some things to just kind of consider there. For now, I'm just trying to continue to build up my base portfolio and build out some of these long-term buy and hold positions. So I'm not really wanting to sell covered calls on these positions. So hopefully that's helpful. Once again, this is not financial advice. Do your own research. Make sure you understand the risk when investing into the stock market. And as always, guys, please like, subscribe, stay tuned. God bless. Cheers.